Tyler Meredith, again, founding partner at Meredith Boessenkool and Phillips and senior fellow at the Munk School of Global Affairs and Public Policy. So, Tyler, we heard the Prime Minister, an interesting note too, breaking down some of the effects of the U.S. tariffs. 1.8% of GDP, $50 billion. Stand out to you, your reaction to that, and anything else the Prime Minister, again, touched on there?
Yeah, so I think the importance of why he was making that case about the impact and starting there with the impact of the U.S. tariffs is because in some ways, this is for Canada the next version of the Great Financial Crisis, right? In Canada, the Great Financial Crisis didn't really touch us. We were just kind of affected by the drop in demand in the U.S., right? But it required us to put money into the economy at a time to be able to stabilize that demand. In some ways, the challenge here, even if the drop in demand right now means that we may not actually hit a recession, is much more severe and potentially long-term in terms of the challenge that we face, because it's a rupture in our trading relationship with our most important trading ally. And there's significant investments that we need to make if we're going to be able to have the resources and the infrastructure to be able to shift those value chain relationships. And so in some ways, I see this, and I think the Prime Minister in his mind sees this as, how is Canada now, 15, 16 years later, going to have to make the necessary long-term investments to shift our thinking and our country, much in the same way as we needed to make sure that we came out of the Great Financial Crisis in a strong position. And it's interesting because if you take that perspective and you look at the size of the deficit that is proposed in this current fiscal year of $78 billion. On a real dollars basis, that's actually less than the size of the deficit that Stephen Harper ran in 2009, 2010, when the government needed to intervene in the right way to stabilize the economy.
Yeah, it's interesting, too, as it gets framed. Brianne, too, your thoughts, as well as we get into this, maybe just a little bit more, too, and hearing from the Prime Minister, at least this morning?
Look at as well is the debt to income for Canadians, right? It's as of the second quarter, we were about 175%. So for every $100 that Canadians are earning or have of disposable income, they're spending $175 that they earn. So, that is definitely higher. And I think, Tyler, what are your thoughts? I wanted to pivot a little bit to that the Build Canada homes. That's something a lot of Canadians, I think, are going to watch closely. The new Crown Corp really, is that going to be fully addressing this housing crisis, or is it more symbolic? Are there enough supplies? Like if we think of, hammer, nails, lumber, labor to really tackle this problem for Canada?
Yeah, no, I think it's a very interesting point that you raised in Build Canada Homes. And I think what's important for people to keep in mind is that there's really three missions that it's trying to serve. So the first is, how do we actually use the significant land inventory that the government, federal, provincial, municipal has to be able to take out, 30% of the CapEx cost of how we build a potential unit of housing? How then do we also ensure that we're able to build at scale, right? And that means both the government itself working as a builder, but also working with private developers to provide a variety of incentives to be able to move things faster. And the third is to build a modular housing industry in this country, because I think one of the things that the Prime Minister has certainly realized is that, the way we build housing in this country, if you think about it just from a macroeconomist perspective, is a major productivity drag on the economy, right? We have a larger share of our GDP that's invested in construction and real estate, and it is significantly less productive than other peers. And part of that is because it's an undercapitalized sector. It's not as mechanized and as technologically enabled. And part of it is because we just have been slower to adopt things like factory farm production. And so, to actually do that, you need to build a market. And that's where government can step in as a buyer to be able to create the conditions that will be able to get thousands of those units built at a time instead of the tens and in some cases hundreds that we're building now.
Certainly, again, interesting and lots of analysis. Tyler Meredith, founding partner of Meredith Boessenkool and Phillips, senior fellow at the Munk School of Global Affairs. And Brianne, appreciate both of your times here this morning. Thanks so much.